Hello and welcome to all the team at Adelaide Baby Bargains. I'm Mark Lewis, the Executive Chairman of Bernie Lewis, and today we're giving you some exclusive tips in response to some questions that some of you put up a few days ago on the Adelaide Baby Bargains Facebook page. And just before we get started on the questions, it was really interesting reading through all of your questions, and being a family man myself, I've got 4 boys. One just turned 1 a couple of weeks ago, and a 7-week-old as well, so it's absolute bedlam in our house. Look, I know all too well the pressures, particularly on your finances, with having that many kids in your house, and you know, cost of nappies and all that sort of stuff. So it was really good looking through all of your questions, and I could absolutely relate to all of them. So what I really want to try and do is help you out with some answers to, or what I think are the answers to some of your most popular questions. So moving on to the first one, is a question from Olivia. It was how to save for a first home. Look, all too hard, particularly if you're renting, but there are some tips, and probably the biggest tip I can give you is budgeting. Now, budgeting is something that comes really easy to some people and really difficult to others. But budgeting is about getting your finances down on paper and realising that a budget is a living document. It's not about sitting down one night with a glass of wine, coming up with a budget, sticking it in the drawer and never seen again. A budget needs to be updated, because your expenses are constantly variable from one week to the next. So make sure that if you're doing a budget, it is a living document, you're constantly referring to it, you're constantly looking for ways to save some money and put it away. Now, I recommend that if you're saving, you create a separate account. One of the online saver accounts, I use Ubank, for example, for my own savings, and that pays you between 6 and 6.5%, which is a pretty good return on your money. And you can't access it easily. So you have to think about it before. You can't just walk up to an ATM and withdraw money out with a Ubank account. So you have to kind of think about it, so it creates that discipline that you can't easily access money. So a Ubank account with some discipline, and just keep chipping away as much as you can, and look for little ways to try and reduce expenses. And look, the reality is only you can answer the question as to what expenses you can reduce. But certainly just keep chipping away. As for any other tips for saving, look, it really is, the sky's the limit. Taking on a second job, finding it, if you're renting, finding a place that's perhaps a little cheaper rent. I know it's difficult, pain in the bum moving and that, but there are a lot of things you can do. It's just a case of sitting down and nutting through it. So that's about the best I can do for question number 1. Question number 2 was how to buy rather than rent, from Amber, and the question was about how much deposit do you need to buy a home. And obviously one of the hardest things to do when you're renting is to save a deposit, but suffice to say there are some great ways, if you have got some savings, to get into home ownership. The first one is we can look at a product called a family guarantee, or a family equity product, which is where you use some family to help you out with equity in their own home. Normally that's one you hit up mum and dad for, and it doesn't cost them anything, because all we're doing is accessing part of the equity in their own home, and they're not required to make any payments or any costs or anything like that. But certainly that's one thing we can use, and that wouldn't require much in the way of deposit at all, provided we can access enough equity. The second one is we have a lender called Homestart, which Homestart is the sort of semi-government lender, and they're pitched at lending to people who are struggling to get into home ownership. So with them, a $3,000 deposit held in a bank account for 3 months. Then we can use the first homeowner grants, the federal government grant, which is the $7,000, and the second one, which, bearing in mind only runs until 30th of June next year, is the up to $8,000 from the SA government. From 30th of June, it halves to $4,000. So if you're looking to get into home ownership and you want to access the full amount of those grants, then you probably need to get your roller skates on. So $3,000 in a bank account for 3 months. The rest of the deposit can come from anywhere. A combination of grants, gifts from parents or friends or benefactors, and 3% deposit plus the applicable stamp duty. So, for example, if you're buying a house for $100,000, wish I could, but use that as the example, you'd need $3,000 plus the stamp duty amounts and the various other government fees. So, look, give us a call. Have a talk to us, to one of my advisors, or give me a call direct, and we can run you through specific scenarios that suit your circumstances. But hopefully that answers the question for you. The third one, with rates dropping, should people start consider fixing? That's from Stephanie. Look, fixing is something I'm not that keen on, to tell you the truth. A fixed rate loan does introduce a lot more restrictions. For example, there's restrictions on how much you can pay over and above the minimum repayments. If you decide to refinance because there's a better deal a couple of years down the track, there's going to be things called break costs, and those break costs can be very prohibitive and expensive. And the fact is that if a fixed rate looks good, it's because the markets have turned, and we've seen some really good fixed rates out there at the moment, but we're also starting to see a downward trend in interest rates. So I would always tend to recommend to people to try and stay variable if you can. Obviously there are circumstances for a fixed rate, and one of those might be you're just on such a tight budget and you really want to know what your repayments are going to be for the next 2, 3, 5 years, and that's fine. But what I would recommend is don't fix all of your loan. Fix half of it or 3/4 of it. Leave some on variable so that you get that flexibility. But over and above all of that, if you are going to fix, make sure you're staying in that home for that amount of time that you're fixing for. So for example, if you fix for 5 years, make sure you're not going to be moving for 5 years, because then if you do, you're going to get stuck with break costs, and they can be very, very expensive. The final question, Teresa asked how to win Cross Lotto. Look, I don't know. I go in it every week and I've never won a thing. But hey, if anyone's got the answer, I'd love to hear from you, because I could certainly do with a Cross Lotto win as well. So thanks everyone for tuning into the first of our video tips. We're looking to do these fortnightly. What we'd love is for people to jump on over to our Facebook page and click on that like button, and that way you'll get updates from us, and also when new videos go up and that sort of thing. If you've got any questions, please throw them up on Facebook, and we can certainly answer them and include them in our video tips, particularly the most popular ones. I know we didn't get to answer all of your questions in this video update, but in the future we're looking at ways that we can actually answer everyone's questions. I apologise to those that we didn't get to, but we'll certainly try and get to all of the questions in the future. So jump on over to Facebook or give us a call on our number, very easy to remember, 8300 8300, and we can certainly talk to you, get one of our advisors talk to you anytime. We're available 7 days a week, or you can, if you want, you can give me a call on the same number, just ask for me. I'm not available 7 days a week though, but certainly during business hours, give me a buzz, and happy to talk and answer any questions you might have. So thanks again for tuning in, and we'll catch you next time.